also see a recovery. Remember, all of these counters were hit on back of that RBI note that had come about over the weekend, or rather on Friday, and post that you see saw these counters actually falling in trade. But it is time for a big ET Now exclusive news break coming in, and I have my colleague Somit who is joining in to tell us exactly what are the REC sources actually telling you with this regard. Somit, over to you.
Well, if you see, we had seen a sharp fall in the share prices of REC and PFC post RBI came out with the guidelines for higher provisioning for projects which are under construction. But now what we are hearing from our sources in the company is that these guidelines are still in draft phase and will be implemented only post there has been a consultation with stakeholders. But what is the more important part, that is what we are understanding from our sources, is that even if these new guidelines as it is, if they get implemented, it will not impact the profitability of the company, and that is what we are understanding from our sources. And also what we understand is that REC will not be required to do any more additional provisioning even if these guidelines get implemented. So even if these guidelines get impacted, there won't be any impact on profitability, no impact on ROE, that is return on equity, and also the company might not have to make any more provisions post implementation of these new norms, which means that their growth also, which was one of the factors that Street was understanding that the growth might get impacted, will actually not get impacted because there won't be any additional provisioning required by REC to do post the implementation of these new norms. And hence we are also seeing some kind of a recovery when it comes to REC and PFC in trade currently, and this is what we are understanding from our sources in the company.
That is what the REC sources have told actually ET Now, that the RBI guidelines for now is just a draft guideline coming in, and a consultation paper will be there which is proposed from the next financial year and will be implemented only after consultation from stakeholders. But I beg your pardon, but Somit, what exactly spooked the markets? Because you saw both of these counters being knocked out of the trade, and also you saw a similar impact come in for most of the PSU banking names, isn't it?
Well, yes, the reason behind the fall earlier was the fact that a large portion of their AUMs when it comes to REC, PFC and IRD is towards under construction project loans. Around 20 to 43% is what analysts were expecting, and because of this higher provisioning requirement, the Street was estimating that around 4 to 7% of their net worth could get impacted because of this higher provisioning. Now the new higher provisioning was of around 5% as against the standard provisioning that we currently see of around 0.4%. And when it comes to PSU banks, the credit cost was expected to increase by around 15 to 20 basis points over FY25 to FY27, and that is because PSU banks have a high exposure to corporate and infra loans in their loan mix, and they're also more inclined toward capex and infra financing, and this could actually impact their medium-term outlook. But at least when we understand for PFC and REC, what we are understanding is that they are already provided for this amount, so no extra provisioning will be required, and there won't be any impact on the profitability, at least what we understand in case of REC so far.
Thank you so much for that, Somit, for getting us all of those details coming in. REC sources telling ET Now that the RBI guidelines are only a draft guideline as of now, consultation paper which is proposed from next financial year and will be only implemented after consultation with stakeholders. And what REC sources are telling ET Now is that even if implemented, it is not going to affect the company's profitability, and REC has already provided for the same.
If you like this video, then like, share and subscribe to ET Now.